So fundamentally, things are doing okay in WA, but as we all know through the press, which we try not to read these days, property values have in the main decreased over the last few years. We're seeing signs through a lot of economic indicators that prices have stabilised, and in some areas there's signs of growth, which is a good news story for most people. However, when looking at the fundamentals of where property prices are, they are subdued because we're not getting a population growth that we were getting in the past. And economic stimulus is happening from the state government. However, they've been very selective in the areas that they're applying that to. So there's some corridors of the metropolitan area showing some better signs of growth. However, it's not across the board. From an investment point of view, it's been fairly low capital growth for a long period of time. So investors being able to get into the market, there's been some correction in prices. So they've come down a little bit. So they're able to probably enter the market and positively gear their properties with low interest rates. Put it into two classes as residential investment to live in, and then you've got your residential investment as an investment to rent it out to a tenant. Both come with two options. You can move into a sort of owner-occupier situation, take potentially an interest-only period where you only pay the interest for a period of time, then you move to a principal and interest that is usually repayable over a 30-year term. Similar to property investment, those both criteria still apply. Lenders are less reluctant to offer interest-only to residential investment in recent times, and you have also got a disparity in interest rates between owner-occupier investment and also interest-only versus principal and interest. So people need to be aware that to gain interest-only as an option is potentially going to cost you a little bit more in interest rates, but also there is a clear appetite for the banks to do that. APRA, as the regulator for the industry, have relaxed interest-only options for investors, for the lenders, and they're taking sort of notice of that in recent time. So review current finances. This is really being ready and prepared for making an application to the banks. There is a tremendous focus on the banks inquiring about everything. They want sort of boots and all, belts and braces approach to gaining information. So you just have to be ready in terms of your account conduct, your account behaviour, and just be ready with all your information so that it meets the requirement. As a broker, we can give you a checklist to the information that you need to do to have around reviewing your current finances, making sure you're getting the best deal possible. This is really fundamental to getting things done. You're able to go online and get a check of your own credit score. It comes at no cost to you. There is a number of providers that will allow that. Having a good credit rating is fundamental to the banks making a positive decision on lending you money. If you have a bad credit score, you may still be able to achieve finance, but it will be a much higher cost of interest rate. Credit score for it is really about making sure you're meeting all your payments, your telecommunication payments, all your bills, you're not missing credit card payments, you're keeping everything up to date. And adverse credit history, again, be very conscious of keeping that current and don't miss payments, because it does impact substantially whether a bank will actually entertain an application from you. So employment verification really is critical. The banks require to verify base data, and all of us have different occupations. Some of us are full-time, some of us are casual, some of us work on a 6-month contract or a rolling contract or work for a labour hire company. It's again working with the broker to understand the information, the verification required by the lender that we would choose to approach to secure your finance, and making sure you get information from your employer or from a third party, keep accurate records and keep hold of those statements and those pay slips that come through, and sometimes a little bit annoying. Most of it's available online these days, so it's accessible and can be provided to the broker to support your application. Sufficient equity. Equity, what does that mean? It's the difference between what your property is worth and what you owe the lender. If you owe the lender $400,000 and your property is worth $600,000, you have $200,000 equity. What we're finding with a lot of our clients in recent times, that equity has been reduced due to property values falling over the last few years. That's a wake-up call when people are looking to refinance or buy another investment property or upgrade their existing home. Working with your broker to ensure that we know what the equity is in the property is really critical to getting the best possible deal and making the pathway very smooth to you as a client. So pre-approval is really about you being confident as an individual that you can go and make an offer on a property, that you have a high degree of success in achieving the purchase of the property, but more appropriately getting the finance that you require to make that settlement of that new property happen. So pre-approval is, again, a full application process. As a broker, we need to gather information to submit that to the banks. So it's no different to a normal approval. It's just something done prior to you finding that particular property that you might look to buy. As we know, and we've seen through the press, it's a minefield out there. Sourcing finance is so much more difficult than it was 5 years ago. As a broker, we help you navigate that course to achieve the best possible outcome. So you may be able to secure that investment property you've been looking at for a long period of time, or upgrade into a new home in an area that you've been looking at aspirationally for some time.